Hi there, Trace. This is Brad Gilbert with FX Market Insight for Monday, the 8th of March. All right, let's just have a look at the non-farm payrolls. Massive spike in jobs. But the average earnings there as well at 5.3%. You've got to look at the, well, what happened was we saw a big jump in the equity markets and the dollar rallied across the board here. We've got the dollar index up, dollar Swiss, dollar yen. Dollar CAD still, you see that little spike in the non-farm payrolls, but the fact that oil is still rallying is putting downward pressure on dollar CAD, so it's the odd one out. And we're seeing really nice, well, trending moves on euro, sterling, Aussie, and Kiwi. Right, so that's where we are. But there's a bit of devil in the detail. And just having a look across some of the commentary here, on the face of it, dollar jumps as US jobs growth beats expectations. But if you have a look at some of the other details, they're sort of saying here that the numbers are a bit masked. It's actually workers that have been rehired that were sort of laid off during the pandemic. So they're coming back to work. That's the big jump in numbers. The black jobless rate is nearly above 10%. And also long-term unemployment hasn't really changed. So there's a lot of work there for the Fed to do. And this, what that detail tells you is, when Jerome Powell, the Fed chairman, was talking about maximum employment, he's talking about the underlying components, which is the long-term unemployed, right? So what that I think does for us is tells us that, and that they're responding saying, well, you know what, the strong economic numbers in the US, the rollout of vaccines, the economic recovery definitely explains why the Treasury yields are going higher, right? And that's what Jerome Powell's been saying. So this should actually support, I think, still higher Treasury yields. I think that's going to impact the equity markets. They should sort of continue to come off. As long as the move from here in the Treasuries is slow and gradual, the Fed will be fine with it, right? They've already sort of explained that. So, but if we start to see massive spikes, and this is what the market does, they like to challenge the central bank. But so if there's massive spikes, the Fed will have to do something. But if it's just nice and gradual, well, then they're saying that, the economy is deciding where they should be, the bond yields, and that should sort of fit in with the dollar. So if that happens, the dollar continues to climb, we should see the dollar block fall and the dollar continue to rally, right? That's where the picture is painted very clearly for me. At the moment, when you come back and look at your charts, particularly say on a Monday, or depending on where you are, Sunday, if we're in Europe or North America, what we're looking for is we're looking to get into these trends, right? So isolate the pairs that have really good direction, but don't forget to come back and have a look on the multi-time frames, hourly, daily charts, try and get the overall trend matching up with short-term entries, etc. And that's where the best opportunity is going to be. Now, it's very rare, unless there was something new out, that on a Monday, I would be chasing the market. If anything, I would be more inclined to be looking for retracements to get into some of these trading opportunities. That's the smart way to go. And when may they occur? Well, you've got to follow, we're starting to see the macros come into play, right? So you've got to follow the trail of the data. Now, if I just come back to the T4T site and just come back to the economic calendar, you want to isolate and plan your trading week. Okay, so what we're looking at in particular is obviously the high macroeconomic data. So if you come down here, there's one number here out of New Zealand, which has been a real nasty thing occasionally, the ANZ business confidence numbers. It's actually the NBNZ business confidence numbers. I don't know why they keep putting ANZ, but this is a low impacting number historically. The last year or two, it's been massively high impacting, right? Big fluctuations here. I've seen this thing, Kiwi move a cent. So just keep an eye on that as you go through Tuesday, right? Mapping out your trading week once again. Then you come back down here looking at, there's a couple of, we've got the RBA governor speaking. You want to keep an eye on that. The major focus though, for mine will be the US CPI numbers. Okay, now massively high impacting numbers. It's one clear number, right? The best thing about this is you can't get, it's not, when you get non-farm payrolls, let me just clear the screen. You get non-farm payrolls and there's about 6 or 7 different variables. Well, here it says year on year, month on month. It's the same sort of number. So what you don't get is confusion with the number. If it's either strong, it supports the whole US economy, raising interest rates sooner than later, we should see the dollar really like a bit of a jump to the top side. If we get strong numbers, if we get really weak numbers, well, you know what? We're going to see that retracement back depending on how weak the numbers are. If it was slightly weaker, it could get us into the dollar trend, which is up. That could be a good thing. But if it's massively weak, well, then you could potentially start to get a bit of a reversal and back into the range, which we don't want, right? Ideally, strong numbers. Now, employment's going through the roof. All the US numbers have been improving. So I would expect the numbers to be as expected, if not a little bit better. But that's going to be major focus for the week, right? So you're looking at sort of Wednesday for those numbers. And then you've also got some other key things coming out. The Bank of Canada, right? You're definitely keeping a very close eye on the Bank of Canada. You've got the ECB as well. You know, a couple of key central banks following the US CPI. This is like a really good scenario because we could have very clear US dollar direction for the ECB and the Bank of Canada. It's going to come out of the statement, right? I don't think there's any change in rates expected. So you have to keep an eye on this very closely and see where the nervous or where the raw nerve is for those central banks. They will tell us what they're looking for and expecting. The euro numbers have been exceptionally weak, so I would expect a very dovish ECB going forward from there. So then you come through into, we're sort of into the latter part of the week. So this is not uncommon, right? You get to Wednesday and you get some key numbers coming out, and then all of a sudden everything starts to line up. And that's pretty common for every week. So make sure you are keeping a close eye on this as you go through things. We've got the ECB monetary policy statement and press conference. Of course, that's going to be important. And then you're starting to come down into manufacturing production numbers out of the UK, like a really robust number there as well. And then there's the rest of the numbers starting to fit into play. GDP, maybe later, but CPI out of Germany. I'd love to see these numbers. I'd love to see them come in weak because that supports the current euro trend. And then as you come into the end of the week, we've got Canadian employment numbers. Obviously, like super important. Every second month, the Canadian employment numbers come out the week after the non-farm payrolls. This really brings dollar CAD into play. Unfortunately, at the moment, dollar CAD, when you are isolating pairs, dollar CAD is caught between a rock and a hard place. Dollar strength and strong oil, right? And that sort of offsets each other. So dollar CAD doesn't really know where to go, but we may have a greater insight because when you piece the week together, we've got the Bank of Canada, right? And also the Canadian employment numbers, two big key factors, which will determine what's happening short-term dollar CAD, maybe even longer term if the Bank of Canada comes out with something exotic. What I mean by exotic is something weird. All right. Now, for those traders looking to sort of catch up on what's going around, don't forget you can jump on the virtual trading floors, join up the various floors, and you can find a bit more insight. And this is where obviously the FX market insight is posted there as well. Lots of good content there going around from traders from all over the globe. So that's something to keep an eye on as you go forward. But map out your week. Look for the key opportunities. US CPI is going to be the start of it, right? Because the US CPI numbers will in fact impact the equity markets. Strong CPI, equity should get hammered. Be a big risk sort of off situation potentially. We'll see how it matches up. Don't forget you've got the treasuries slowly edging higher. That should give the dollar an underlying big tone, put pressure on the equity markets as well. And one other thing I just noticed before I just came online was just looking at how comfortable the market is with the current trading activity. See the volatility index, right? Dropping back down here to 24. This tells me that the market is very comfortable with the numbers that came out on Friday, non-farm payrolls. They're very happy with the moves in the treasury markets and the equity markets. So you know what? We're getting closer and closer to normal macroeconomic trading conditions, and that's really good for us, right? So depending on where you are located should determine where you focus on, which pairs you focus on, and make sure you go through and isolate which pairs are really impacting. It's been a while since we've seen the Chinese numbers impact Aussie and Kiwi, so keep an eye on those as well as you go through this week. And that's all you can do. Plan ahead, get your technicals organized, find out the current market direction, okay, using your charts. And from there, it's just a matter of waiting for the timing, right? You get the timing right, you get the direction, entries, now you're making money. All right, guys, have a good trade week. We'll see you tomorrow. Cheerio.